Hello there. Welcome back to Check Accounting. In this video, we want to look at the preparation of the income statement. So, a question that we have there from a past exam paper. And this is question 3 on that question paper, and it's on income statement reports. But particularly in this video, we're only going to look at the income preparation of the income statement. So, this question that we have, and it reads the information below was taken from the books of Samantha Distributors. Their financial year ends on 20th February 2017. Then on the required part, the first part is the one that we are going to concentrate on, which is the prepared income statement for some other distributors for the year ended 20th February 2017. And it has got 65 marks, very important. So we go down now, trying to see what we have now in the question. So if we go down, you'll see that on the next page, we're given the information of some other distributors when they're given pre-adjustment trial balance as at 20th February 2017. We're having the debit column and the credit column, and the balance sheet account section we are given there. Then I will go down, also have the nominal account section. So going down, this is the information that we have according to the trial, the pre-adjustment trial balance. Then obviously, if you go down to the next page, we can try to see in terms of other information that we are given. So if you come here, you would see that we are also given information here that we have. And this is information 12 that we have according to our question. On the additional information, we also have adjustment number 1 here. Going down to let's try to see additional information which you need to go through before you start to answer the question. And this is additional information number 11. So if you come here, you see that this is now the additional information number 12, which is the last one. So our question ends here. The information that we are given according to the question, according to the question paper. So going to our answer section, let's try to see what we have in terms of our answer section. So you see that this is our answer section for some other distributors income statement for the ended at 20th February 2017. So we're going to start with sales. So we're going to look for the figure for sales that we have. And obviously, we're going to look for adjustments that are going to affect sales in terms of data allowances or sales returns that are going to reduce the amount for sales. And obviously, we can also try to see if there are any adjustments that are in the additional information that are affecting our sales. Then we can adjust as such. So we come here now and try to see the figure that we are having for sales. And we are seeing that for sales, and the figure that we have is 875,000, which is here. And we now check for any allowances that are going to reduce the amount for sales. We have got data allowance here, 12,600, that we are going also to subtract. And then having that now, we also go to extra information to see if we got anything again to do with our sales that can reduce the figure for sales that we have. So if you come here on the first item, which is item 1, it reads a credit note was issued to M. Shaba data for 1,500 rands. This was for merchandise retained. The cost price of the goods retained was 1,200. No entry was made. So very importantly, no entry was made, which means these were retains as part of our data allowances, and it was not included because it was omitted. So we're going to check it at selling price. So in the sales figure, we're going to reduce using the selling price. Remember, this is the selling price, and this is the cost price. So in the cost of sales, remember, in the cost of sales also, we're going to adjust it because it was omitted. It was not adjusted in the cost of sales figure. So in the cost of sales, we adjust it using the cost price. But at the moment, let's try to adjust it using the selling price. So we are saying it's part of our data allowances. So it's going to increase the data allowance figure. So we are also going to subtract it from the figure for sales. So what we are saying is the figure that we are having for sales here, let's try to recheck. We've got 875,000. We're going to subtract data allowance 12,600, and then we subtract again the 1,500 that was omitted, and then we get the actual net value of our sales. So we come here. We are saying sales here. We can just show the week in brackets whereby we are saying 875,000. Then we subtract the data allowance 12,600. And then we subtract again 1,500, which is the data allowances that were omitted. Then having that, we can now calculate there. We subtract the figure that we're having in brackets, and then obviously the answer that we are supposed to get there is 860,900. So here we've got our 860,900. So having that now, we go to cost of sales. Then on the cost of sales figure, we are going to also adjust the figure that we have there for our data salaries figure that was audited. Remember, these goods were assumed to be retained. They were retained, so it means they are going back to the closing stock. So the closing stock figure is going to increase by the cost price. And on the adjustment of cost of sales, remember cost of sales, when we're calculating cost of sales, we say opening stock, we add our purchases, we less our closing stock. So it means the cost of sales figure is going to increase, it is going to reduce our cost of sales. So 1,200 also is going to reduce the cost of sales figure that we have. So we can just check the cost of sales figure that we have there. We see that we are here, and we try to see the figure for cost of sales that we are given. You see that our cost of sales is given here is 500,000. So we are going to subtract 1,200 for those goods that were retained, and we subtracted cost price. So we come here on the other section and adjust the side. So on the other section now, we can say cost of sales, and then the figure for cost of sales given in the trial balance is 500,000. 500,000, and then you're going to subtract your 1,200. Right, we subtract there. The answer that we're supposed to get there is 498,800. So this is the figure for cost of sales. The gross profit now, remember cost of sales we subtract, so we put it in brackets. We are saying 860,800 minus 498,800. And we're going to get 362,100. So this is what we have for gross profit. Then go to operating income. We have got discount received 9,280, and it's pre-ended, so we can just leave it. Then we go to rent income now. Rent income, of course, we go to our trial balance and try to see the figure for rent income that we are given, and we see that rent income we are given, it is 37,507. But we don't check the figures it is. We check additional information in the adjustment section. If we've got any adjustment that is affecting our rent income, if it's there, we need to adjust it. But if there's no adjustment, we're going to check this figure as it is and put it there in the income statement. So we try to see rent income if you've got anything that is there. But if you come to additional information number 8, rent has been received up to end of March 2017. And if you go to the beginning of the question, you'd see that our year is ending on 20th February 2017. So this rent income was for March, which is out of our financial period, because it's ending on 20th February. So it means this rent for March is not supposed to be there. We are supposed to remove it. It's income. It's income received in advance. So remember, whenever it's in advance, whether it's an expense or income, we're supposed to subtract it because it doesn't belong to this period. So we are trying to abide by the matching principle. We still remember. So we go there and subtract that that one that was an advance, but we are not only told that it was received for March. So it means the rent that was received was for 12 months up to end of February plus March, which means 13 months. We had our rent being received. So to get the monthly rent now, we are saying the total rent income that is there, which is 37,570. And then we're going to divide by 13 to get the monthly one. So if you say 37,570, you divide by 13, you're going to get your 2,890. So we are saying 2,890 is the monthly one. So this is going to apply also for March. So it means for March, we have to subtract this one for March, which is representing March 2,890, from the total for rent, which is 37,570. So we go on our answer section and just adjust as we have there. We come here. We are now saying other rent income in brackets. We say we have got our rent that we are given in the trial balance is 37,570. And then we subtract the one that was received in advance, which is 2,890. So let's take note that whenever it's in advance, we subtract, but whenever it's an accrual or an owing, we add. As simple as that. So we subtract there, the answer that we are supposed to get is 24,680. So this is what we have. So this is what we have, and then we try to see if we still have another income that we have in the trial balance. We check in the trial balance in the question. We have rent income here. We've put our rent income as 37,000 that we've just adjusted. So we can check for other incomes that we have in the question. We see that we also have discount received is there, it's pre-entered, isn't it? So we can just leave that one. Then we look for another going down. I would see that we don't have any income that is there in the question. You go again to additional information to check if you have got any other income that is stated in the additional information. You start from additional information number 1 going down, searching for any income that you are having in the question. We go to information number 9. Information number 9 says a debtor is pouch deposited 850 rands into the business bank account. The debtor's account was previously written off as recovered. So this is bad debt recovered. It was previously written off and it has been paid. So we call it bad debts recovered and it's an income. So we've got an income of 850 that we need to include there as bad debts recovered. Then we go there. So here we are saying also have a space here that we can put our bad debts. Covered 850. Which means having this now, it means we no longer have any space since we've exhausted all the incomes that we have in the question. So we can now add 9,280 plus 34,780 plus 850. And the total that we are supposed to get there, it's 44,810. And operating income, we add it to gross profit. If we say gross profit plus operating income, you're supposed to get your gross operating income. So if you add the two, the answer that you're supposed to get after adding 362,100 plus 44,810, you're supposed to get a gross operating income of 406,910. 106,910. So this is what we have. And then we can now go to our operating expenses section, whereby we have got discount allowed as the first item that we have. So for discount allowed, we are going to check the figure for discount allowed in the trial balance. We are here, and discount allowed, we can have it here, it's 800. And then we check in additional information. So whatever item you take in the income statement, you don't take the figures it is and put it in the income statement. First, you have to check if the adjustment, if you've got any adjustment that is affecting that item. So in terms of this discount allowed, which is an expense, we go to additional information to check anything that is affecting our discount allowed. So if you go there, we start from the beginning of the question, the additional information number 1 going down, checking for that discount allowed. If we've got anything to do with discount allowed, we go to additional information number 10, and the last point, a disordered check from P-Lobby data for 1,200. This check was a settlement of his account of 1,280. You see now. So when this check was issued, so when we received this check, we adjusted in our books that we've received it, and we processed it with a discount allowed inside. So what is now happening is that this check was disordered. It was not processed at the bank. So we had already adjusted as if the debtor had paid the amount due, but now we do have to reinstate that amount because the check was disordered. Remember, when the check is disordered, it means it wasn't processed, so the payment wasn't processed. No money was received at the bank, so you need to reinstate the amount that P-Lobby is owing as a debtor. So we calculate the amount of discount allowed that is there. If you say 1,280 minus 1,200, remember the account was 1,280, but the data had paid 1,200. So it means there was a discount allowed of 80. So this 80 was inside our discount allowed, since we had already adjusted it. So we need to remove it as discount allowed. It's no longer part of our discount allowed because the check was dishonored. So we are supposed to remove it. So we're saying the figure that we are given is 800 in the list of balance. In the trial balance, we remove 8 because it was not processed. So we go to our answer section and adjust as such. So we are here. We are saying discount allowed in brackets. The figure that we are given there is 800. Subtract 80. And then the answer that we are supposed to get there is 720. And then we go to salaries and wages. We check again the figure that we are given in the list of balances. And for salaries and wages, we are here. And the figure is 96,750. And then we check additional information, anything to do with salaries and wages. We are not seeing that we are not seeing anything. Then we can go to the next. If we have got anything that is again mentioning about salaries, go to the last page of the information of the question. Right. If you go to information number 12, it's saying one employee has been omitted from the salaries journal of February 2017. So we are saying, coming to the information number 12, we are given the information of the salary that was omitted. So what it means that we are going to add this salary that was omitted, and we take the gross salary. We are supposed to take the gross amount, which is the gross salary, which is 10,000. So we are going to add this 10,000 to the figure of salaries that we are given there in the list of balances. So remember, when we checked the figure for salaries, the figure that we got was 96,750, and we are going to add our 10,000. So I'll go to the other section. So on our answer section, we are now saying 96,750. 96,750, and then we are going to add our 10,000. And then the figure that we are supposed to get there, when we add, we are supposed to get to 106,750. Then we go to bad debts. Then for bad debts again, we are going to go to our list of balances to check if we've got our bad debts there. So you see that we've got the bad debts, we have our 5,200. Then I will check in additional information if we've got any other bad debts that are there. But if you come to additional information number 4, let's try to read it. It reads, a debtor C. Clarks was declared insolvent. Is instead offered to pay a dividend of 40 cents for every rand owed. His original debt was 1,200 rands, and the balance was written off. No entries were made in the books. So it means the one that is going to be paid is 40%. That is 40%. 40 cents is 40%. It's one that is going to be paid. So it means what is going to be written off is 100 minus 40, which is 60%. So basically, if you say 60% of 1,200, we get the amount that is going to be written off. So you're going to say 60 over 100 times 1,200. And we see that the amount that we are supposed to get there is 240. So let's just try to calculate it and find the figure that we get there, 0.6, which is 60%, then multiply by 1,200. You're going to get your 720. So this is 720. This 720 is the same amount that you are supposed to add to bad debts to get the total for bad debt. So here we are saying 720. So we are saying the figure that we have in the pre-adjustment trial balance is for bad debts is 5,200, and then we are supposed to add your 720. So you go to the other section and make the adjustment. So here we are saying bad debts, the figure that we have is 5,200. Then add your 720. So the total that we are supposed to get is 5,920. 5,920. And then you go to bank charges. Obviously, for bank charges, you need to go again to our list of balances to try to find out the figure that we have for bank charges. It's 1,210. Then you go to additional information to check if you've got anything that is affecting bank charges. If you don't have anything affecting bank charges, you take 1,210 as it is. But let's try to see if we have anything. Right? If you go to information number 10, you see that we've got some bank charges that are there. We've got the service fee, and then we've got the cash deposit fee, part of bank charges. So say 40 plus 200, 40 plus your 200, you get your total bank charges of 240, 240, and then you add to the 1,000. Let's just try to verify the one that was in the list of balances. 1,210, you add 1,210 to get the total for bank charges. So you come here. You are supposed to say other bank charges in brackets. You've got 1,210, and then you add your 240. Then the total that you are supposed to get there, 1,450. Then we go to insurance, you do the same. You go to your trial balance in the question and try the figure for insurance is 9,800. And you go to insurance information to check anything affecting our insurance. And for insurance, if you come to insurance information number 5, you will see there's something. Let's try to. So if you come to additional information number 5, it says insurance includes an amount of 1,800. This is an annual payment for the period 1 August 2016 to 31 July 2017. So this is the insurance that we have 1 August to 1 August 2016. 1 August 2016 to 31 July 2017. But let's try to find out where our year is ending. Remember, at the beginning of the question, that's where we're having where the year is ending. It's ending on 20th February 2017, so end of February. So we are saying our year is ending on 31 July 2017. Our year is ending, sorry, end of February. So we count the number of months that we have that are outside our financial year. Remember, it's ending end of February, so we are saying March is outside. March, April, May, June, July. Those are months that are outside of financial year 1, 2, 3, 4, 5. So we've got 5 months that are outside of financial year. So you need to calculate the proportion of 5 over 12 times 1,800. That represents the amount that is outside our financial year. So if you do that there, 5 over 12, let's try to calculate there, 5 divided by 12, and then the answer that we get, we multiply by 1,800. And then you are going to get your 750. So 750 is outside our year, and it comes as a prepayment, and the prepayment we subtract. So you're going to subtract this 750 from the amount of insurance that we have in the list of balances. So the amount of insurance that we have in the balance sheet is 9,800. So we subtract 750. So we go to our answer section. So here we are saying in brackets, the figure for insurance that we are given is 9,800. Then you subtract your 750, and then the answer that we are supposed to get is 9,050. So here we've got 9,050. And then you go to telephone. Telephone, we also go to our editor information to check if we've got anything. The amount that we have there in terms of telephone. We'll try to start by the trial balance, whereby you're given that telephone is here, 12,560. And we check in editor information anything to do with the telephone. So we see that editor information number 11 reads our telephone account for February 2017 was received, but will only be paid in March 2017. So we received the account of the amount due for February, but we are not going to pay it. It's going to be paid in March. So it's an owing. So remember, when it's an accrual or owing, we're supposed to add it. So add 1,000 to the amount for telephone that we're given there, which is 12,560. And we get the total. So we get there, go to the answer section. So for telephone, we are saying 12,560. And then we add our 1,000. And then the total amount that we are supposed to get is 13,560. Then after that, we also go and check other expenses that are not listed here in the other section. So we come here. We have got stationery, which is 10,800. But stationery, this represents stationery that was bought. So to get the expense for stationery, so we are saying expense for stationery is equal to amount in trial balance, which represents stationery that was bought, minus closing stock stock of stationery that you'll find in the adjustment section in the additional information. So here we are seeing that to see the expense for stationery, now we are saying the one that we have in the trial balance is 10,800. So we are saying 10,800. Then we subtract the closing stock for stationery that we have, which is which go to additional information, we see that is 800. In some questions, we don't have closing stock. So it means the whole stationery that was bought was used. So it represents all the expense. So here we're subtracting 800. Then obviously you get your 10,000. So this represents the expense. So this is adjustment that we are going to make in our answer section. So we come here, we are saying stationery. If we are saying 10,800 amount bought minus what we have, what we have at the end of the period, which is 800. And we are left with our 10,000. Go to additional information to our trial balance and additional information to check anything that can add to our expenses. Also, have standard expenses 5,400. But if you go to additional information, you're going to see that we've got nothing that is affecting our standard expenses. So in such a scenario, you're going to take 5,400 as it is and put it here. So we are saying salary expenses. And the figure that we have is 5,400. Then we go and check again after salary. We've got water and electricity 14,200. If you go to additional information, you're going to see that we don't have anything to do with water and electricity. So we're going to take as it is as an expense, which is 14,200. So we go there. So we are saying water. So we are saying water and electricity, and the figure that we have is 14,200. And then we go and check again if we've got any other expense that is listed in the trial balance. You see that we've got our interest on loan, but which is something that we are going to adjust after operating profit. remember? So we can just leave it, and then we those are the expenses that we have. Then we go to expense information to see other expenses that might be there but not listed in the trial balance. You go item by item checking. If you have adjusted everything, there are some that may not be stated. If you go to item 2, donation of goods to an old age home was not recorded, cost price 3,000 rand. So any donation that has been made is an expense. It has to be put under operating expenses. So we've got 33,000, which is indicating our expense as donation. So we go there. So here we are saying donation. And we are saying 3,000. We have 2 spaces left, which means we've got other 2 expenses that we have in the question. So we go down checking additional information to check any other expense that we can have there. So if you come to item 6, we have got depreciation for the year 3,400. So already calculated, so we are taking it as it is, depreciation 3,400. So here we are saying our depreciation. Uh, 3,400. Then we go and check again. Remember, we are supposed to check also for trading stock deficit or surplus, but in this case, there is obviously a deficit because there was no space for a surplus according to the other spaces. So to calculate a trading stock deficit, you are going to say your book value minus your physical stock count value. Then the answer you get, if it's a positive, it indicates a deficit. If it's a negative, it indicates a trading stock surplus. If it's a positive, it indicates a trading stock surplus. So we are looking forward to get a deficit. So we are saying the book value that we have, let's try to see. Book value is the amount that will be having, in the trial balance. And then the physical stock count value is the one in the additional information or adjustment section. As simple as that. So we go to the question, and the book value is the one that will be given in the. So the book value is this one, which is 16,300. So we come in, we say 16,300. But the book value might have some adjustments that you can see in the additional information in terms of some things that will be omitted. Like here, we come here, we see that we have got donations that were made. We have got donations that were made, which is 3,000. So it means it's going to reduce our book value. So it's going to say minus 3,000. Then we also have some goods that were retained that increase the value of our closing stock of 1,200 cost price. So you're going to add 1,200, then you subtract 3,000 of the ones that were donated. So the ones that were donated moved out of the business. We are supposed to remove them. The ones that were retained got back to the stock figure. So they are supposed to be they're supposed to add it. So we go there and make that adjustment whereby we are saying 16,300, we add the one that was supposed to be get back to the stock, and then we subtract the ones that were donated. So the answer that we get will represent the book value. Then the physical stock count figure is the one that you are given in the additional information as the physical stock count value. We come here. A physical stock taking on 2017 review the following. You've got trading stock, so we only take the figure for trading stock. We come here, we say minus 12,000. So you've said book value minus physical stock count value, which is represented here by saying our book value, which is the value that we get here, and then we subtract your 12,000, which is your physical stock count value, and then we calculate correctly there. The answer that we are supposed to get there, it's 2,500. So you've got a positive figure of 2,500, representing a deficit. So I'll go there in the other section and just summarize this working. So what we are saying is here we are saying trading stock. Trading stock deficit. In brackets, we are saying 16,300 plus 1,200 minus 3,000. Then also subtract you the 12,000. Then the final answer that we get is 2,500. So this is what we have. Then obviously you need to add all the expenses that we have, starting from 2,500 going up, all the expenses that you are having there in this box up to 720. And then the total that you're supposed to get is total operating expenses is supposed to be 175,950. And we subtract it from the figure 4, gross operating income. So we say 406,910 minus 175,950. You're supposed to get your operating profit, which is supposed to be 430,960. And then for the interest, here we are now getting 230,960. Then obviously we have our interest income. Remember, we go to the question to try to see about interest income. Right. Come here. Remember, interest income usually we are given it as interest on fixed deposit. We are given it as interest on fixed deposit. So we can go up and try to see. We see that interest on fixed deposit, we have 10% of 2,000. Then we are going to get 10% is 10 over 100. Then you multiply by 2,000, and then obviously you're going to get your 200. 20% of 20,000, sorry, it's 20,000. So you get your 2,000 is your answer here. And then go to additional information to see if you got anything that is increasing or decreasing this figure according to the adjustment that you are given. We have got an interest on current account, which is 150. That needs to be included also. So you're going to add the 150 to the 2,000 that we got there to get the total for interest income. So we come in. Remember, interest on current account also is part of interest income. So you're saying interest income, you're saying 2,000 plus 150. And obviously, you're going to get your 2,150. And interest income, we add it to the operating profit to get the figure for profit before interest expense, which is going to be 200, which is going to be 233,110. And then you say now profit before interest expense minus interest expense, you get your net profit, which is going in interest expense, you are already is pre-entered, you are already given 13,500, so subtracted from our profit before interest expense to get the net profit, which is 219,610. So this is the end of our question. Let's subscribe and share the channel. Let's share the link to our friends who are doing grade 10 accounting. Let's turn on the notification button as we upload new videos. You get notified so that you enhance your preparation for the exam. As for this video, I'm signing out. To meet again in the next video.